Hey guys, welcome back to my channel. Today's video is going to be about how I decide which dividend stock to add to my dividend portfolio and the steps I take to find that stock that's just right for me. So what is dividend investing? Dividend investing is an investing style that offers the investor the chance to create a stream of income from their stock purchases. Not only does investing into dividend stocks give the investor a quarterly and sometimes monthly stream of income, it also offers growth in the form of appreciation. So as a dividend investor, there are a few things I look for when deciding on a dividend stock. The first thing would be is how safe is the dividend? The first thing I look at when I'm assessing on whether or not I want to invest into a dividend stock is their payout ratio. To find a company's payout ratio, you'll need to divide the company's dividend by its EPS, earnings per share. For example, if a company has a $2 dividend and an EPS of $10, that means the company's payout ratio is 20%. My sweet spot for a payout ratio is in the range of 50 to 70%. Generally, the lower the payout ratio, the more room it has to grow its dividends. Any payout ratio that is above 80% is something to keep an eye out from because it might indicate troubles ahead. The second and probably the most important aspect I look at is a company's free cash flow. Free cash flow is a cash that is left over after a company pays for its operating expenses and capital expenditures. So you may be asking yourself, why is free cash flow important? It is important because it shows how well a company generates cash. It helps investors determine if the company might have enough cash after funding its operations and capital expenditures to pay dividends and possibly buy back their shares. So how do we find free cash flow? We use operating cash flow minus capital expenditures. Capital expenditures are also commonly referred to as CapEx, and they are funds used by a firm to buy, upgrade, and maintain assets. Now let's look at Apple's 2018 cash flow statement. Operating cash flow was 77,434 billion minus capital expenditures of 13,313 billion, which equals to about 64.121 billion of free cash flow. Remember, too high of free cash flow can mean that the company isn't investing into the business as much, and too low of a company's free cash flow can mean that the company is investing into expanding the business. That's why it is important to have more than one metric when deciding on a dividend company. The last metric I use to help me pick dividend stocks is quite easy, and it's just checking the consistency of a company's dividend. For example, is a company a dividend aristocrat, which means that the company must have a market cap of at least 3 billion and a record of raising its annual dividend for at least 25 consecutive years. And if possible, is that company a dividend king, which means they will have to have consistently raised their dividends for 50 consecutive years. Caterpillar being a dividend aristocrat and 3M being a dividend king. And those are just a few metrics I use to help me find a good dividend paying stock. If y'all like the video, make sure to like and subscribe and all that other stuff the YouTubers say. I'll catch y'all next time.